we'll be experiencing the intraday trade as for volatility. So what is this method actually? We used to calculate the volatility from the past 10 days data. Then we are using the Fibonacci Gann or Elliott principle to estimate the trading levels. So I have taken just past 10 days trading data for the Nifty future. So Nifty future last 10 days trading data, trading last traded price, I have just taken it like this. So from this is the data points and I have just taken it here, and it is telling me the volatility, its daily volatility is 0.36, yearly terms it comes to 7.01. This is a too low volatility condition. So anyway, we'll just estimate the trading levels. So from 7977 level, so I have just estimated the level. It is saying that buy signal at 7984 and sell signal at 7970. This is what we got as per the volatility method. How to calculate the volatility? First we have taken the logarithmic of current day divided by previous day. Then we have taken the square of this logarithm value at each step. Then we have taken the average of this logarithmic value and average of this square logarithmic value. Then we are calculating one factor called variance, which is this 1.75, the square logarithmic values average minus the average logarithmic value whole square. So this is how we are calculating the variance, and square root of that variance is giving us the volatility multiplied with 100. It will give us in the percentage term. So this is the daily volatility. If we want the yearly volatility, then we have to multiply it with the square root of 365. So this is how we have calculated the volatility, and buy sell signal we have generated based on this particular volatility. We have expected that 30-point move will happen in the Nifty, which is for today. However, here what happened, we have scaled somewhat more than that. So there is opening gap here. So opening itself, we have crossed all the levels and we have opened at 8021. Today we have opened at 8021. So this level didn't valid for the day. In fact, we have opened at 8021. If it happens like that, then you need to replace the last record with the opening price and get the new level. So today's level is 8027. We should purchase 8028 level. We should purchase. Give a stop loss of 8014. Targets for the day maximum 8056, and it will be moving with a level of 8032, 8038 and 8056. So this is the level for the day as for the volatility. So for the day, as for the volatility, we must buy Nifty at 8028, keeping a stop loss of 8014. These are the targets for the day. Maximum we can expect 8056, which is 1.236 retracement of the Fibonacci level, and we are at a very low volatility of 6.88. We are at 8028 level. 8028 level we are currently trading. So nothing wrong keeping 8014 as a stop loss if we are purchasing this one. Nothing wrong if we are buying the Nifty future with a stop loss of 8014 with a maximum target anticipation of 8057, 56.72. This is as per the raw volatility estimate. However, our current yearly volatility is 6.88, that too taking today's opening gap into confidence. Henceforth, we are in a very low volatility territory. So still we can think of purchasing this Nifty future with a stop loss of 8014 for a target of 8056. So this is what you have seen as per the raw volatility estimate. So let me move to our two tools I am going to demonstrate you today. One is using the Gann angle we have devised a trend finder tool. Using the Gann angle, we have devised a trend finder tool, so which will be estimating the volatility in real time basis, and it can give you the levels in real time basis. So I'm just loading the 25th September data and Nifty. I just want to estimate the trend for the day. So here too I am getting, currently it is 5.91. This is the real time volatility. The historic volatility what we have calculated by taking today's opening price and last 9 days data into reference, we are getting 6.88. However, currently we are at a very low level of volatility, which is saying that we are at a level of 5.91, and the day end we may expect 9.69, provided if the Nifty touches 8066 level. So 8066 level if Nifty touches, then volatility may goes to 9.69. Currently we are at 5.91. So this is the volatility, and this too also says this uptrend will be get confirmed once we are crossing 8038, and this 8038 of confirmation or minor uptrend confirmation has all power to take us to 8066 level. So this is a real time estimation of the volatility. What you have seen in the Excel sheet, that is a raw volatility method by taking 10 days data into consideration. However, this is as for the real market value, and this is as for the real time value. So this is how it differs, and same way I'll take for the Bank Nifty also, and you can take Bank Nifty also. Currently 22.71, 15,992 above uptrend will be confirmed, and this can take you to 16,200 level. If it happens, then your volatility may go on intraday basis to 36.98. If it fails and 15,888 it is failing, then it can drag down to 15,682. So Bank Nifty currently having a volatility of 22.71 as per the real time estimate. So currently we are at 15,930. So if this is the volatility scenario, how we can just trade? What is the trading level as per the volatility it comes? So that also I am going to demonstrate with our volatility tool. Same volatility concept is being used here. Same Fibonacci, Gann and Elliott principle is being used here. So this says that currently which is we are at 15,925. If it crosses 15,963, think of buying Bank Nifty, keeping a stop loss of 15,894, and these are the targets in the up move, and these are the targets in the down move. So I'll be just taking the screen print of that also, so that I can share with you afterwards. So just I'll take the screen print of this particular experiment, so that I can share with you on day end with its success or failure. So this is the Bank Nifty levels we are getting, and if you are taking the note of these levels, just take a note of this: 15,963 stop loss, 15,894, and these are the targets for the Bank Nifty. You must ask me, with such a huge stop loss, is it advisable for me to enter a trade? So you must ask me this thing: with such a huge stop loss, is it advisable for me to enter this particular trade? So wherein I'm just losing 63 plus 6, it is near about 69 point, my stop loss is sitting here. However, My first target is hardly 20 points. Second target again goes by 30 points. So third target. So for means it is almost 56th. If I am not achieving till third target, my risk reward not coming to 1:1. So here what happens? Volatility, Fibonacci, Elliott, these principles are being used to estimate these levels. However, this is not a level which is manually being fixed by anyone. So neither it is being manually fixed by me or by anyone. So here what happens, we are taking last 10 days data and current opening gap and getting that estimated volatility. However, the real time volatility is calculated through a different way. It is being taken into consideration current days opening, current days, how many candles has passed through, all these things it is taking into consideration, and using a GARS approach it is estimating that volatility. So here what happens, the volatility what you are getting is real and it is being taken with respect to the other methods. So without diluting this method, if we are little skeptic about this particular trade and if we are little nervous about this stop loss and targets, we may think of hedging this trade. So where my downtrend is starting here, 15,894. What is the final target I am expecting? 16,160 if all my targets is achievable. So can I do in this order? So if I just enter a trade in this particular order, like buying Bank Nifty at 15,964, and since I am in the first day of the settlement cycle, selling 16,200 call option, whose price I do not know, I have to estimate it here. So future options are 16,200 call option, at what price it is quoting, let me take. So it is 195 rupees. So if I just sell the call option at 195, why I am deciding this one? Based on this particular value. Just to see here. So this says if 15,963 breakout given to me, I have all probability to touch 16,160 or in between any of this level. If this trade become a failure, then I am going to, my stop loss is going to trigger at 15,895, wherein I can say 69 point of stop loss I am just having, and this 69 point of stop loss I am not going to accept. If it is lesser, then only I will be comfortable with that. So for that I am buying the Bank Nifty, and in fact once it is coming to 15,964, definitely 16,200 call option will be trading at 200 plus. At current level of 15,925, it is at 195. So my optimum target is 16,160 and 16,200 call option, which is at 195. I am selling it off. I am selling each one lot just to protect my future trade. So this is one way of hedging my trade. Or what is the other way? Suppose if I do not wish to sell the call option, then I can think of in this order also, buying the future without diluting the volatility concept, buying the future, and same time I can think of buying a put option by 15,900 put option. So these two also I can do it. 15,900 put option. For this I may be paying a very heavy premium. So maybe I will be paying a very heavy premium here, because it is the first beginning day of the settlement cycle. So time value will be quite high. So 300 rupees it is quoting, 299. So I can think of buying a put option also at 300 rupees. So if this trade goes against me, then this put option will be compensating a part of my losses. If I will be selling a call option also, if the trade goes against me, that 16,200 call option will be compensating a part of my losses. It is not going to compensate 100% of your losses. Rather, it can compensate a part of your losses. So this is the two different ways you can hedge. You can think of forming a delta neutral also for intraday basis. For that you need to hunt for a strike which is having a delta of 0.25 above, and you can multiple lots you can accumulate so that you can able to hedge that. But that may not be much beneficial for intraday. But if you are just selling a call option or buying a put option which has a lesser time value, then it is better. But since you are the first day of the settlement cycle, I'll prefer the first option. Because it has a greater time value. So I'll prefer the first option, buying Bank Nifty with a stop loss of 15,894, and along with that selling a 16,200 call option at 195 above, or at that time it may be trading at 200 above. So I have just initiated this particular trade of Bank Nifty with these views. Does anyone has?
Good morning to you all. I'm Dr. Meeta joining you from Chennai Smart Finance. Today is a very special day as we are witnessing the live market demonstration of our technique, where the innovator Mr. Ranjan himself is giving demonstration. It is not for the first time we are having such event. This is going on for a couple of years, and under free educational service of the organization we are doing this. Recently we have conducted many free public events in the metro cities of Mumbai, Bangalore and Chennai. And then after the finest deviations, the finest modification of these concepts, so those things we are going to teach you in our upcoming paid seminar. We are having 2 batches of upcoming paid seminar in the month of September. One will be in the offline batch Chennai and one will be online batch. The dates, as you can see, 7th of September is a full day program in Chennai, morning 9:30 to 5 p.m. where Mr. Ranjan will be teaching in person the techniques you can see given below, including our GAN, Fibonacci, Elliott wave, option strategies, including delta neutral strategy, pair trade. These are the priceless techniques he will be teaching you in person with the finest detail of these techniques he will be teaching you. So it is a full day program, and the same thing also we are going to cover in the online batch. Online batch theory session we have for 3 days, 22nd, 23rd and 24th of September. From anywhere in the world you can join us and listen us. 4:30 p.m. to 6 p.m. Indian Standard Time, and 3 days will be the theory session. For both the batches we have practice sessions also. That will be 2 days following this theory session. Towards the end of September only we will be having, in the last week of September, 2 days live market interaction will be there, and in addition to the 3 days, 2 days live session for online batch, in addition to the 1 day theory session, 2 days practice session for the offline batch. What else you will be getting if you participate? Along with the seminar you will be getting 7 hours audio visual course where Mr. Ranjan has explained how these techniques can be used successfully in his own voice, in his own words. Studio recorded lectures you will be getting, 7 hours lecture. Then 3 months we will give you our automated intraday and positional software. These are the real-time softwares we will be giving you absolutely free for 3 months. The name of the tool is Integrated Tool. Integrated Tool in the product number 3 you can see in our website, product number 3. That will be given free of cost for 3 months to use. Smart Finance All Software Integrated Tool. This tool we will give you free of cost. It's a real-time software. For 3 months you can use if you participate in this event, so that practically you can also experience how the trades to be done, to be initiated and how to be closed. Besides this, 3 months email support we will be giving you. Those emails will be coming from Mr. Ranjan's desk directly, and time to time in the present scenario, what kind of strategy you should follow and how you can make, all those things he will be teaching you through email. So it's a full-fledged course. Along with the theory, you are getting market hour practice session. Along with that, you will be getting also 3 months to use the tools free of cost. And there is a fee. The price of this session will be 5,000 rupees if you wish to participate in Chennai, and online if you wish to participate, it will cost you 6,500 rupees. And for the previous participants, we have kept discounted free. Previous participants are also given discount because of a reason that time and again you have to listen to this concept. Then only you can understand the ifs and buts of this, and you can follow it properly. That is why we encourage, in order to encourage that thing, we offer the discount for previous participants. Online you can do the enrollment. As you can see, the buy now buttons are there. You can take our banking detail also if you wish to do online transfer to our account directly. It doesn't include any further material which are available in the product list. In our products list, you can find 9 of our products are available as paid products. These are the 9 of the products you can see, and each of them includes a number of softwares and books and DVDs. These all books are being written by Mr. Ranjan only. Out of his 10 years huge experience in this field, he has mentioned all those details written by him only. You can avail the books. Along with that, we offer 3 DVDs in each package, where his studio recorded lectures are there on those concerned topics. Along with that, each package also has a real-time software using that same concept. So we have a price. You can check out by clicking on each of these, including option strategy or volatility, all are there. So it starts with 1,500. Each package goes up to 10,500. So if you buy all these packages together, we offer you a 54% discount. If you buy separately, it costs you 37,000 roughly. And when you buy together, we offer you 17,000 only. 17,000 with our all softwares, including 18 DVDs and 6 printed books. Postage is free within India anywhere, and for out of India, you have to bear the additional postage. Any question regarding the product?
Learn together. So I am just going for my option. Those who are using the volatility software or integrated tool software, they have this feature. So this is option arbitrage, one of the most safest trading technique we can experience. So I will be just going through the bank nifty. Since bank nifty is at a good volatility, so I am just going for the bank nifty. I'll calculate it here, and this is for intraday. Sorry, I have just gone through the intraday volatility. I have to go for the options intraday. So here I'm just going for index future bank nifty September series. I need to load, and I'll be, once the all strikes and everything is got loaded, I'll be get prompted with the icon all data is loaded. I'll go for the analysis of the future. So future, which was before 15,965, now it has just changed to 985 because it is working on a cycle concept. So person who has entered at 966, maybe it is a first target for him, but the person who is analyzing now, he will be getting a different level. And here too the volatility is 17.62. This volatility has fallen down, which is 22, it has fallen down to 17.66 because of this 10 to 15 minute of your range boundness. Now it is saying that 15,985 above we are uptrend, below 15,912 we are downtrend. So taking this part as a reference, so let me choose the 16,000 call option. Let me choose the 16,000 call option and analyze. So whether 16,000 call option, which is currently at 302, telling me to purchase at 321, keeping a stop loss of 280, and this is my target. Nothing wrong if I can purchase it now, because earlier analysis says that I am at 15,965 above, I am in uptrend. So I am at an uptrend now, 970 level, I am at uptrend, and nothing wrong if I can buy this call option now with a stop loss of 281 for a target of 330, 338, and maximum I can expect till 402. Once your volatility has fallen down from 21% to 17, your levels also has fallen down. You have expected level has fallen down, which was 16,166 level has fallen down to 16,135 level because of fall in the volatility. So this is the first with respect to the call option. Now I have also estimated 16,100, 200, 15,900 and 800 call option. So let me go for those options and see any arbitrage value is there. So I am going for 16,100 call option. So I am going for 16,200 call option. I am going for 15,900 call option, and I am going for 15,800 call option. This is what I have now loaded. So let me reduce this screen and see what is the fair value. So 16,800, I have a fair value 250. It is quoting at 260. So I have 10 rupees excess value in 16,100 call option. 16,200 call option, which is fair value at 206, is trading at 216. These two also 10 rupees excess value in 16,200 call option. And 15,900 call option, which is 57, is almost 57, it is fairly priced. 15,900 is fairly priced because bid and offer is having a little difference, so it is having a zero arbitrage value. 15,800 call option, which is supposed to trade at 419 rupees, is quoting at 414 rupees, 4 rupees lesser value is there. So if I wish to enter a arbitrage trade, nothing wrong if I can buy 15,800 call option at a price of 414, and simultaneously if I can sell 16,200 call option, 200 call option at 216 rupees. So 215 or 16 rupees. If I sell one lot and one lot here, so here my arbitrage value is 4 and here arbitrage value is 10. So 10 plus 4, 14 points of gain I am expecting on the day end. Day end, if any of these targets, 16,004, 16,022, 16,039, any of these targets is being achieved by day end, then I may expect this 14 point gain. So which is in the 25 lot size, it is coming to some 200, and so 15 points means, so 15 20s are 300 and 5 are 75. So 300 and around 350 rupees I may expect as the arbitrage gain if Bank Nifty closes near to my target 2, target 3 or target 4 in the off move, and this 14 point gain will be there. I'll quit this trade. I'll quit this trade if Bank Nifty is coming to 15,912 or slipping below that. I'll quit this trade at a small loss. So at that particular time, what will be the losses for that? So 414, 216, if I'll lock this one, so 414, 414 I am buying and 216 I am selling. I am expecting an arbitrage gain of some 14 points. So this is my expected profit into 25. Arbitrage gain is 350 rupees. If it is falling down 912, then what will be my value? So if it is falling to 912, so 15,912, if it is falling, then this premium which I have, so I have just taken 15,800 call. So this is the 15,800 and call. So if it is going for this value, so if I'll, so it is saying that 373, 374 it will be quoting. So here if it is fallen down 374 you will be quoting, and same time if it is the other strike, which is 16,200 call option, which is being taken a reference of 210, and if I am just analyzing here, so this will be quoting at 196 at that particular time. So I'll be having a loss of, so this, so 40 points here, and here also I'll be getting 20, so 20 point profit. So here the option what I have sold, so this one, so 216 I sold 912 level, so I'll be having a liability of 20 points. So it may not be promising for me. So at this particular time, if it is 912 it is falling, then I will be having a liability of 500, if and 350 is the arbitrage maximum gain, so it is not viable at this particular time. So if it is fallen down to 912, then my loss will be 500 rupees. If it is going to some 16,000 to 16,022 or any of this level by day end, so by day end any of this level if it is attending, so I'll be having only 350 rupees as a profit, 350 rupees as a profit, and in fact if I'm losing, I'll be losing 500. So it might not be viable for me now in this particular situation. Because 500 to 350 is not a, it is a not a risk reward of 1:1. So I may think of some other strikes, and I may think of some other strike to form this arbitrage opportunity. So arbitrage opportunity is a trading strategy wherein you can identify the mispriced option and you need to sell the option which is having a higher value as compared to its fair value, and you need to buy a option which is quoting at a lower value as compared to its fair value. So this is the strategy for arbitrage trading. So bank nifty we have identified, yes, 15,800 and 16,200, these two are having the arbitrage opportunity. So we have identified 15,800 is having 4 rupees lesser value, and 16,200 is having 10 rupees of excess value. So 4 rupees of lesser value here. So to gain this 14 point, we may think of buying this one and selling this one, but our analysis of this at stop loss point 15,912 stop loss point where we will exit this trade, it says that one lot can give us a loss of 500 rupees, whereas the buying side, if it is any of this target 2, target 3, target 4 achieved, then we may get only 350 rupees as a profit. So this is not a good risk reward ratio. So let me move to the nifty, whether any arbitrage opportunity is there. So any arbitrage opportunity is there, so that also we can think of taking. So nifty, if any arbitrage opportunity is there, you can think of taking that one. So nifty future analysis 851, and these are the levels, and current volatility scenario has changed, and currently the volatility is 7.018. so this is the volatility scenario. So I'm going for, suppose 8,051, I'm close near to this one, so I'm going for a call option analysis. It is telling the call option which is at 127 is telling me to buy at 134, maximum 127. So this is what the nifty, and let me add this nifty to identify this arbitrage opportunity. Let me identify 8050, 8100 and 7950, those strikes. So 8050 call option I am adding, 8100 call option I am adding the 7950 call option, and I am also adding 7,900 call option. So let me see any arbitrage opportunity is present here. So here 7,900, which is supposed to trade at 212, is quoting at 196. It is having 15 rupees as a arbitrage value. So 15 rupees lesser it is quoting. So 7950 168, which is having 8 rupees arbitrage value. This is with respect to 7,900. This is with respect to 7950, and 7,850, which is supposed to trade at 94, is trading at 1 or 2. So 8 rupees of excess value is there at 8050, and similarly 8,100, which was supposed to trade at 65, so 77 it is trading, 65 to 77. So 2 and 12 rupees as the excess value are here. 8,100 also having a excess value of this one. If you want to make a good gain from this trade, so think of buying 7,900 call option at 197 and sell 8,100 call option at 77 or 76, whatever may be. So 77. So this trade has a potentiality to give you 27 points of arbitrage gain. So in 50 size, 50 is the lot size, so it is almost 1,350 is the arbitrage value is there, and this 1,350 arbitrage value you'll be getting if Nifty manages to close on any of these levels of target 2, target 3, target 4 by day end. But one thing, be sure, this 1,350 you may not get in the totality. You may not get 100% of 1,350. You may get on part of that. So if Nifty manages above 8084, then maximum you can get 1,350, and if it is falling to 8035 level, then you need to close this trade and come out from that. So you need to close this trade and come out from this. And I have just also given here the expected high and expected low. So expected high 249 you can go, and simultaneously this is 88, so 77 whatever you are selling can go to 88, so 11 point losses it will give. Simultaneously 250 rupees means it is some 50 points it is going to give you here. So this is the expected high points. You can get this one 7,900 and 8,100. Similarly expected low, which is coming to at 8,000 level, so this level it will be 45 and 175. So this expected high and low points, you can estimate the profits and the losses in intraday basis. If it is managing to 8084 above, then this is the expected highs you can get, and intraday basis if it is fallen down to 8002, this is the expected lows you will get. But I am not telling you to hold this trade till that point of 8002. I am telling that at 8035 level try to close this trade, and once it is going to target 2, target 3 or target 4 level, so that time you can close this trade and come out with a profit. So this is also a good arbitrage trade. You can think of initiating this Nifty, which is having 1,300 points. Even though if you get a part of that also, it is a great profit. In case of a trend reversal, you'll be well protected. Losses will not be much as compared to a plain future trade. So this is how you should do the option arbitrage trade. Any questions in this particular segment? Many of you are using this particular tool. Many of you used to put me the emails. So I have stressed upon this concept today on arbitrage trade, how safely you can do the trades. Any respect to this arbitrage trade, for the first 2 weeks of the month, first 2 weeks of the settlement month, you will get good arbitrage opportunity in the Nifty futures, Nifty options. First 2 weeks. On the third week and fourth week, the arbitrage opportunity will not be much, and that may not be sufficient to meet your expenditures, your brokerages and taxes. But first 2 week is a golden time to initiate this kind of arbitrage trades, and you can initiate with a high volume trade also. Very high volume trades also you can initiate. Start with a low volume, get some confidence in this arbitrage trade, make some money out of that, then think of initiating with a high volume trade. So this is how you can protect your capital. In case of a trend reversal also, you may get some opportunity in the put option. You simultaneously you can have arbitrage trade in the calls and puts also. Suppose if you are just going for a put option, there too also some arbitrage opportunity will be there. Why only call options? So if you just analyze this one, so 8,000 put option, if I take into confidence and analyze, there too also I will get some arbitrage opportunity. So you may have a, in case if you are saying that AS uptrend is intact, we are expecting, because we are very close near to the uptrend price of 8051. Suppose if I am having some 10 lots in the call side arbitrage, 10 lots of 7,900 I am buying, 10 lots of 8,100 I am selling. So nothing wrong if I can just have a 3 lots of put and a put arbitrage in some other direction, so that in case there is a trend reversal, whatever the losses I can incur in this 10 lots, at least a part of that I can recover in that opposite side. So 10 lots, if I am saying I am expecting 13,050 profit, 500 profit. So nothing wrong if it is slipping below and it is going to 8,002 level, and I am just incurring a part of loss, say 2,000 to 2,500 losses I am incurring in the call side. A part of that, some 1,000 to 1,500, I can recover back from the put side. So this is how I can just do that. Certain times, suppose you are saying that, okay, I did not achieve that 13,500 today. Nothing wrong if you can hold it for tomorrow. If there is a, suppose there is a range bound, I can say that yes, it has closed at a target too, and I am not getting entire 13,500, so 1350 per lot. So nothing wrong tomorrow if market opens, and in fact with a gap of and it goes to 8075, I may get that 13,000 profit. So for that I may think of waiting for a day also. That is nothing wrong. So arbitrage, you can change your trade behavior based on the arbitrage trades also. That is my point of saying. So